Welcome to TradeTheMBI.com. This is John's reports for the 28th of April. Well, as we close out the end of the month, we were coming back off the little dip here. We'd started to see the build of midterm buyers, and we were just waiting for the little pivot. Short-term buyers have been keeping this up in literally relatively no short activity as we continue. We were just waiting for a turnaround, shakeout. We started to see the breakdown from it. If we look at the histo, we were at 0.19. Then the other day we had increased to 149, and already today we're up in the just above 5. And of course we broke the other level right here that we had, the 67 level, and that puts us right up against the 61% Fibonacci line right there at 29.23. I know you're thinking we're about to report the largest single GDP drop in recorded history, and the market is going to be relatively close within 30% of its all-time high right there, from at least this short brief decline coming back up from a Fibonacci standpoint. But relatively speaking, we're right back where we were well before the virus struck. So it's an amazing thing. It was being touted by Trump just yesterday that it's a miraculous event of support for future growth, which that's going to be an interesting one because there's just a whole lot of dynamics going on as far as how any of this is going to work, especially if you're still not allowing country-to-country travel and commerce that way. It's going to be interesting. So from an NQ standpoint, already at the 76%, but a little bit softer. So this is a little bit behind comparative to the S&P. So the S&P is catching up. But when you look at the numbers, I mean, it's really, for the most part, the 5 big tech companies that have made it the majority of this stability move and run, where a lot of the other regular companies that actually do business are really suffering. Though there's not been an Apple store open for a while, and everything they've been doing is online. Of course, it's beautiful for Amazon because that's what they do, is online, so perfect for them. But the vast majority of other locations that aren't just, food retailing, it's a problematic situation. Something as simple for me, like going to the bank, I have to call to get an appointment where I have to give them all my information, what I intend to do, which begs the question why that just isn't enough to complete the transaction. But then I have to go, you have to stand and yell across the room at the person, and then they execute it. But then, of course, they hand you the pen, and they're not wearing any gloves or anything like that. So it's this kind of comical in its own dance sort of way of what bureaucracies and the foolishness of rules and things. It's sort of like stopping beachgoers from being by themselves on a beach and thinking that you really need to go after them. And then speaking of controlled manipulation, look, there's no justification for these valuations for any of them. So you have to just get past that. And I keep preaching this one, but it's a tough one, really, for people to absorb, because you see everything going on around you and it doesn't match what's going on in the markets. Now, some people say, well, they're expecting a fourth quarter rebound. Well, it doesn't really make any difference. The Fed's buying up everything and supporting this floor. And as long as they have a floor, you just have to bid off the floor, whatever that number is. So the number becomes irrelevant. I want you to start thinking about it in those terms. It's not about the number. It's about where they pick that support point and the trade that then goes off of it. And as long as you follow it that way, it'll be a little bit easier to grasp what you're seeing, because it does defy the logic of math. And that's fine. This isn't the first time, and certainly won't be the last time you see direct massive market intervention. From an oil standpoint, it's just getting more bleak. We're getting closer and closer to this just max threshold. Nobody seems to want to completely shut their spigots off, and this is part of the push towards, they always talk about wars leading to oil. Well, part of the push, I think, to reopen as quickly as possible was oil, because there's just nowhere to put it all, and nobody's stopping the production of it because it becomes problematic. to the point where, again, we're talking about giving in negative oil for the June contract coming up, and that may even spill over into the July one. So this is one comedy after another, though the dramatically lower prices should translate significantly into lower energy costs for everyone around the board. If you're actually using the energy, and two, if you can afford to pay for it. Now, I mean, with the amount of borrowing that's going on, you get this beautiful corporate issuances of new debt, which conveniently is being bought up by the Fed as well in the secondary market, which, this partnership they did with BlackRock to, buy up everything, certainly working out well. And from a gold standpoint, it's keeping a lid on it, but I still think there's plenty of upside potential for gold. We had the little soft period here where, again, cyan under red is always a buy, but we always talk about this configuration here where you have the steel crosses above and then back below where orange then skyrockets. Now, what you expect to see then is red coming down. It didn't happen in this particular case. It still produced softness. Not that much. You still have rising gold. So still expect it to hold on, continue to do okay. So the market started up, then we went into this flat mode and we had this kind of brief ups. And it's just one of those things where we could see it with the Sigma event. We were expecting the highs to be taken out in that, and it was just getting back and forth in here. And it was like, for me, once we're at this 47, there really isn't much you can do. You just sit there and wait for to at least reach the 100%, which just allows you to ignore a lot of the noise, is what I would call a lot of this happening. Shake out and stay positive throughout. And then, of course, yes, it did make the new highs. And so that's where we were talking about it on the Skype chat at that particular moment. And after that, it was just sort of like, okay, well, I can just set and forget. And then we just continued to try to cross evenly for most part of it. I did have a question about the white DOC that you see on this chart. You don't necessarily see it on the other ones. I was adding it in there from a reference to examine orange dips below it to prevent earlier entries on what would be otherwise positive buy signals, but that usually fail. And so, like, this is a perfect example here that took place just this morning. To below the red line, green above, all looks good, but yet it made new lows. Now, you still would have been within the confines of, a reasonable stop, but do you want to face, the heat, from a 73 down to a 51? I don't think so. But here you have the configuration of the same setup, but orange dips below the white, being a little bit further derivative of the calculations. And that was the one that actually produced the monster return without any downside pressure. So is it going to miss, some continuation things? Sure. But when you're talking about an oversold configuration, I like it when it's moves that are below the negative 7.5 or lower. And I'm just continuing to do the research on that, but it's something I think that will be of assistance, particularly when it comes to matching power mode pivots like this, which was the buy at the same spot. But it also triggered the uptick right here, corresponding to the previous move. So this just adds to the strength, is what I want to refer to it as, because you really want those high probabilities. Now, I'm reluctant to eliminate the setup for the other, because oftentimes you'll get this little setup and it will produce 3 or 4 bars of 4 or 5 points. And, some of us do trade some of those little micro moves. So it becomes balancing act. And it's just about what type of trade you like to make versus the opposite. Now, from my standpoint, going from this BK and then not having a cover until you get an actual signal, I kind of like, but you're never going to catch the bottom on those. So this becomes one of those where as soon as I'm getting up pivots, you got to start thinking about cover points as they take, particularly when it comes to the 23% line breaks above them. So That's kind of the way I look at it, which leaves you sometimes a little bit where you're not in the play because you're covering at the 23, but you don't have a buy signal until the new configuration takes place. And so sometimes you have to wait. And I don't think that's a problem per se as much as constantly flipping. The concern I have for some, though, when we talk about, not exiting a short until you're ready to go long is when you're having difficulty transitioning between one direction to another. If you can't be fluid, if you're always taking a short and not taking a long, if you're always taking a long but never any shorts, you really need to pay attention to that and evaluate it, because it should be something that just flows to the signal, because as you can see, the market flows up and down like this as well. And I know sometimes people get jaded, but this is something that computer models don't do, and that's why they're successful at it. Speaking of which, let's look at the daily ATR bust after its successful win before. It repurchased at 70, so that's up another 30 points on that one. So moving along there. And I will be putting out indicator updates so that little new adjustments that I'm working with will be sent out along with those, and hopefully you'll see that on the paint bars. Hopefully you won't notice it on the paint bars. It would just become a nice seamless look of fewer buy configurations and then the ones that do show up are the ones that are on nice up moves, just to narrow the ranges and just make it easier. So that's always the ultimate goal. As always though, trade well, and I will be on the Skype chat. Talk to you later.